July 29th after hours, 9 p.m. Wanted to just do a take on the euro, how I could have played it looking back, given the FOMC today. So we were in this range before the announcement. We were in the support zone that I already had identified on the daily. On the 240, we were bearish, but we had formed kind of this big engulfing up and then a flag, and we were in the flag. And there was this, you argue some reasonable trend line there as well. And I'm sure, well, I'll do it, but I'm sure there's going to be divergence on the RSI here. Wow. Pretty significant divergence, actually. So, yeah, that's kind of the environment we were in. So note this for next time. And then let's get into the granular. So obviously this bar is the Fed bar at 11, but let's look at what happened leading up to that and I did recognize this a little. So it was kind of like, ooh, that looks like a double bottom. And here's the neckline. And it was in the support zone, not the fib per se. Let's put the fib on just to make sure we're keeping ourselves honest here. Yeah, so fib zone, prior support zone, all down here, but this was off that last high because these are all 1 bars. So double bottom. And the thing is we did not. I was watching this, but we never broke and closed above the neckline before the news came out. So that was sort of what's holding me back. So on the 15-minute, here's that same thing. And now it's worth noting this barely touched this wick zone. So, sometimes double bottoms do form like that. It might be easier to say this, but there was a bit of a huge impulse and then falling wedge as well. And then on the 5-minute, I do remember looking at this and thinking there's a lot of divergence on this 5-minute wedge. Where was that? Sorry, let me get it to where. There we go. So, what was there? Well, I guess it wasn't. I guess it was pretty flat on this wedge here as far as divergence is concerned. So, we have on the 240, we've got a trend line. We've got a very impulsive move towards that trend line. We have a flag forming right under that trend line. On the 60-minute, we form a double bottom on prior support or prior resistance or whatever. We never close above that neckline. On the 15-minute, the double bottom looks not as deep as usual, just touches the zone, and we start coming up, but we never actually closed here either on the 15-minute before the announcement. So had we zoom into the 5, a couple things is we would have technically had a close. Let's get rid of this here of the neckline right here. Close on neckline. Literally, what bar is this? 10 minutes before the news at 11. Coming back down, probably like, oh, what did I do? Why did I take this trade right before the news? Boom. So stop below the lowest low, or even what I did here is I took the wicks height of kind of down here, put it here, and put the stop below, but it didn't matter. This would have been a banger trade. Huge risk reward. Let's see. Yeah, a 3-bagger. So I think that's what I'm really getting at is I think either put a limit order above necklines and in term of news, if you see a formation like a double bottom, that's solid at support. And let it just catch, or wait for a close on like a five. Don't be afraid to zoom into that 5 minute graph and really look for it down here. Um, that's what I'm looking at. And the overall structure was in a sideways range on the daily. We were in support. We had this trend line down, impulsive flag, boom, 60-minute. Here's that wedge form. We look like we formed a double bottom here. Prior support, we're just below that neckline, unable to break it. And then on the 15 and 5, you'll start to see the double bottom was formed with a very impulsive bar and then a bit of a falling wedge. You could have played a break of that wedge as well. That would have put you in about here, or on the 5 minute, somewhere in here. But even if you just waited for a close above the neckline or a limit above the neckline solid, would have been bam. So